Welcome to the MarketEdge Tech Talk with Will Paule and special guest David Blake. We're going to review the market conditions of the past week as well as longer-term trends from a technical perspective, take a closer look at the major indices, and to wrap it up, dig into a handful of individual stocks and ETFs requested by subscribers. If you have questions or want to submit a stock for next week's webinar, email us at support@marketedge.com.
Hello and welcome to the Tech Talk for Tuesday, June 7th, 2022. I'm your host, Will Paule, and I'm here with my co-host, David Blake. How are you doing today, David?
I'm doing good, Will. Thanks.
All right, let's start off with a look at what the market's been doing this past week with a look at the market letter.
Last week was a little bit of a disappointment. We had the bulls and bears in the tug-of-war for most of the week, going back and forth. And then on Friday, we had that jobs report that was a little bit stronger than what we were hoping for. And kind of sold off on the Friday, and ended up negative for the week. We're kind of hoping we get a little bit of follow through off of that bounce from towards the end of May that we had. We had a real nice week where we were up like 3 or 4%, but we didn't quite get it. As far as the market goes, we kind of had a little rough start on Tuesday. After that long weekend, we had Europe taking additional steps to wean itself off of Russian imports. And actually, I think Chevron was the only Dow stock that was able to close in the green on Tuesday. Oil prices soared up to about $119.80, I believe. They've been flirting right around with $120. I think they're up around $118, $119 today too. So the oil stocks are still moving up. I think they're getting a little bit stretched right in here, but we'll have to see what happens. With China coming on board. Reopening, that's going to keep upward pressure on oil stocks. I don't think there's any reason to sell them in here yet. Okay, also weighing on the market towards the first of the week was Fed Governor Christopher Waller. I think he's a little bit more hawkish than what we wanted to hear. He was, we pretty much have a half a point hike scheduled in here for June and July. And going into last week, we're at about a 30% chance of maybe a half point rate hike in September. And I think as of Friday of last week, after a couple of Fed governors came out here, I think that was up to about a 61 or 62% chance of another half a point. And the market's probably not going to like that if we do that. I don't think we'll see that. I think we'll start to see some of the rate hikes in here start to slow growth enough that we can start seeing the CPI and PPI and stuff like that start to pull back a little bit. That's what we're hoping for. Anyway, we saw the 10-year Treasury. It was eyeballing 3% early in the week. It pulled back a little bit. I think it settled at about 2.94. Yesterday, we got back above 3. I think we got to 3.09 on the 10-year Treasury. That seems to be a spot that bothers investors. Today, we started off lower on a warning by Target, saying that their revenues and margins are going to be lower than expected, and we started off lower. But then that also, it's kind of one of these deals where we're in a thing where bad news will be looked at as good news going forward, because that means that that maybe inflation numbers are going to ease themselves back a little bit. And so the yield of the 10-year fell back below 3% today. I think we're right about 2.9 again today, something like that. And that allowed the market to bounce off the bottom. In fact, the Dow was off about almost 200 points, I think, early, 250, something like that. And now we're up about 180 right now. So the market likes being under 3% with the 10-year, to say the least, right now. Okay, we came out on midweek. We had Jamie Dimon from the CEO of JP Chase. He kind of got in people's face and warned the investors to brace yourself for an economic hurricane. He thinks that the Fed's late reaction to inflation is going to bite him here later in the summer. We'll have to see what happens with that. But coming in here on Thursday, the market was down another 435 points. But then we got signs that China was close to reopening. They were going to boost, we have to get some more stimulus out there to boost their economy. That helped get things going. And we ended up, actually going positive for the week at the close on Thursday, but we rolled over again, like I say, on Friday with the jobs number. That kind of, like I say, it was kind of a disappointing follow-up week after the week we had where the markets were up 3 and 4%. That was pretty nice. Now, the technical condition is still positive. Even though we were unable to build on the previous week's gains, the technical indicators, the MACD is still positive. Momentum slid back into neutral ground, which but nothing below. Still above 50 on the 14-day RSI, so that's pretty good. I mentioned that we're butting heads up against some of the retracement levels. We really haven't gone up and taken a good shot at like any of the key moving average resistance levels or any of the Fibonacci retracement levels. The first ones which we'll come to is the 38.2%. A lot of guys will sometimes watch the 25% also. That's one to just keep in mind. But we really want to see these indexes get up to that 38.2 and actually close above that. We saw the NASDAQ and small cap Russell 2000. They're outperforming off the bottom, but they're still off the most. So they're still in bear market territory. They're down about 26%. We want to see that that start to outperform the broader market. We also want to see maybe the small cap Russell 2000 and the Philadelphia Semiconductor and also the Dow Jones Transportation Index. We want to see them start to show some outperformance also, a little bit of relative strength, which would be a sign that perhaps they're going to start to lead the market up higher. Now, I do think we have a limited upside in here, but with our CTI, our cyclical trend index is positive. We at bottom here, the low we saw towards the end of May, that I believe was an 18-month cycle low. We usually get a pretty good bounce off of that, which we did, but we should see some follow through. We'll probably look at some charts here a little bit later, and I'm starting to think this chart formation in the S&P 500 may look like a little bit like a flag pennant, which could mean that we take this pause in here before we get another tick up. As far as sentiment goes, we're still overly bearish. No one's going to come out here right now with rates going up. You don't fight the Fed and proclaim they're all in. The market's going to rally. But we did see an uptick in the retail investor, the American Association of Individual Investors. They jumped up to 32% of the retail guys are bullish now, compared to just 19.8% a week ago. And then the percentage of bullish investment advisors also had a nice little tick up. I think it went to, let me see, where did they go? They went from, they went up to, it was up to 35.2% from 28.2. So that's still a bearish indicator at this point. But we'll see that when they get that when it gets that low, it's actually you look at it, it's kind of bullish for the broader market. But the hedge funds was kind of surprising. They weren't as sold on the rally off the May low. They were showing the American Association of Individual Investors, the National Association of Active Investment Managers. Their exposure index had come in around 30. Let's see, around 33.2, I think, 2 weeks ago. Yeah, 33.2. It only increased to 34.3, which means they weren't buying into this bounce off of that, which surprised me a little bit, because a lot of the hedge funds, they don't want to miss any kind of move, and they're usually they move a little bit faster than the retail guys oftentimes. Now maybe we'll see that pick up this week. We'll have to see what happens. But again, it's so far this as of last week was a little bit of a disappointment. As far as underlying breadth goes, that was kind of wishy-washy. Also, we didn't get too much of that. Maybe we can look a little bit of that Will.
Yeah, sounds good. Let me pull up the market recap here.
Yeah, go on down a couple of pages. We often talk a little bit here. You can see the NYSE and NASDAQ advanced decline lines. And you can see we had, especially on the NYSE, we had a really nice bounce in those numbers. That's showing that most of the market is under accumulation. Not quite as strong on the NASDAQ, but still is going in the right direction. We want to see that. Also, if you'll take a look over there, just below that on the new high, new low list, we actually now have had, let's see, 1, 2, 3, 4, 6 of the last 7 sessions on the NYSE. We've had a positive. We've had more new highs, new lows. Not by much, but still, that's the right direction. That's where we want to go. We haven't been able to crack that nut yet with the NASDAQ. We'll keep an eye on that. That would be kind of an early sign also that, hey, we're starting to get a little bit more leadership, and that's something we want to do.
All right. Well, that sounds nice, but I think your market outlook is really kind of mixed here. What would happen? What would have to have happened for you to either become more bullish or bearish in this climate?
Well, Friday, I wrote last night in the daily comment. The market struggled yesterday with the rising rates. Once the 10-year T-bill rate crossed above 3%, it kind of stopped anything going on. We did have the Dow was up, I think, 16 points. The S&P picked up by 12 points. It was not much going on, but Friday coming up, we get to see the May CPI number, and it's going to be big. We've had 3/4 of a hike so far in rates. With the past 2 meetings, we're going to get another half a point next week. A lot of that, if we get a half point, and then we see on Friday of this week the CPI come in below expectations, and I don't know what. How much below expectations would help the market would kick off a rally, if it would at all. But I think that's going to be really watched. And then, of course, we want to watch next Tuesday. We start the FOMC meeting for June, and Wednesday they'll make their announcement on rates. Of course, like I say, right now I believe as of the close, we're something like it's a 96 or 97% probability that we get a half a point rate hike in June. So that's baked into the market, and also another half point. I think in July it's something up. It's like 91% for that. So we want to make sure that they don't start coming out here and proclaiming that we're going to keep going a half a point until we get this thing beat. What the market is afraid of, they see that we need action. The prices are staying okay. We're going sideways right now. The fact that we do have to battle back inflation, but what the market gets afraid of is, as we always talk about, is that can the Federal Reserve steer us into a soft landing? And usually they don't. It's almost an impossible thing to do. They put their foot on the pedal, and then they've got to let it up easily, and they really never ever do it. So that's going to be a problem that we'll have to see. The more aggressive they get after they get another 1 or 2 hikes in here, if they keep talking a big game here, they're going to rattle investors. That could be another problem. But as long as we start to see some kind of motion in some of these inflation numbers, that'll be good. Again, we're fighting with China coming on reopening. That could be inflationary a little bit as more demand comes out for goods. But on the flip side of that, if they can get their factories open, maybe they can get more goods over here quicker, and that would maybe stop some of the demand on what we have. Now, as far as what you want to watch for on a technical basis, we'll go to the charts for a minute. We can go right down the line here. Let's start off with the S&P 500. I talked last on Friday's letter that what some of the things we want to do. If you can draw in the Fibonacci thing from that first of the year down to the May bottom, so that people at home can do this. When you see this, and you'll see right now, what we've retraced. And we're right below that. We've almost retraced 38.2% of the move down from January into May. what will make me more bullish, and if you look a little bit over there to the left, when you see that number has already provided some kind of support, or that's where previously, that is a good sign. You don't want to see like a 38.2% retracement level on price that didn't really mean anything in the past. So that's kind of telling you that this is going to be a nice resistance point. If we can see the S&P 500 get a nice close up here around 42.05, something like that, 42.10, that would be a sign to me that we can probably, we'll have that summer rally, and we should be able to rally up maybe to 43.25 or so, 4,300 for the S&P 500. But first, we need to get that, break through that 41 or 4,200 on the S&P 500. As far as the other indexes go, if we can see the NASDAQ, has not gotten to that. It's go ahead and put the NASDAQ up too, because this is one where you can see with the 25%.
Would you like to do a comparison or just the NASDAQ on its own?
Just do the NASDAQ on its own. Of course, this goes back to the November high, and come on down here to the May low. Okay. Now you see right there, this is the NASDAQ actually ran into resistance at the 25% retracement level. We need to see it get through that. I'm not sure what that number is on that. I can't see it from here.
12,286.
About 12,200. We need to see the NASDAQ get above that 12,200, and then I think if we can get that, it should be able to make a retracement level up to the 38.2% level, and I would think we could possibly see it get up to around 13,000. That would be a nice summer rally for the NASDAQ. Right now, the 14-day RSI is at 50. Remember we talked a couple weeks ago how once the 14-day RSI breaks below 40, it means you're in a bear trend rather than bullish trend. So we want to see the 14-day RSI also get above 60, get up there around 65, 70. That would also point that we're on our way to a summer rally. Another thing I'm going to keep an eye on. You don't need to go to these charts, but we want to. We always talk a little bit about. We want to see the Dow Jones transports and the small caps lead this market. The transports is a little bit harder to draw. That's why I don't want you to pull it up, because they had that big spike when Avis or Budget or something like that that came back on board and announced a split or something, and the whole index jumped up like 8% in one day. So it makes it kind of tough to determine exactly where the top is. But it's basically come up here and struggled just below its 38.2% retracement of where I call the top, right around 14,550, somewhere around that. So we want to see the transports get above 14.5. I think today we're at, let's see here. Today we are at, we're at 14,560. It's up 1.81%. So the transports, that's a good sign. We want to see that leading. The rest of the market's up up a quarter to 0.5%. The transports are up 1.81% today. That is big. That's something we really want to see. Even more important than that, that's over the 5-day. My fault. Okay, transports are flat today, but we are at 14,560, which is where the resistance level is again. We also have the Russell 2000. We want to keep an eye on that. It's struggling just above the 25% retracement level, but I think we want to see the Russell 2000 get above. It's one of the first ones that's starting to come close to one of the key moving averages. It today got up to 1899, and that is where the 50-day moving average is on the Russell 2000, and that is big for this market because none of them. That's the first index that we've seen get up to that resistance level. That is big. Anything above, if we can see this Russell 2000 get above 19, that's going to be another bell going off that the summer rally is on the way. And finally, the last one I want to look at real quickly is the SOX. That's the Philadelphia Semiconductor Index. Like all these are secondary indexes, and yet it's been struggling with the 50-day moving average too. We got above it on Thursday or so last week, Wednesday, and today we're at 30.84 on the SOX, and that's just above the 50-day moving average too. So you have leadership as far as going through resistance levels by the semis and by the small caps, and that is what we want to see. Now, we get if you see the S&P 500 bust above that 4,200 with the transports and the Russell above this 50-day moving average, then I think we can go ahead and get that pretty much count in a summer rally. I think for the target for the Dow on that summer rally would be let's see. For the S&P, I think we can probably get up around close to 4,400. I think the Dow Jones I have somewhere around 34,000, somewhere in that area. So we can have a nice move. I don't think it's something that you want to chase up there. If you're more of a trader, if you buy something in here and you're expecting that thing, I think we can rally into July, and then I think from what our cycle work looks like, I think the market's going to struggle a little bit going into towards the middle of August and into September. There's a lot of things coming up in the fall with the midterm elections that are probably going to kind of keep the market struggling a little bit. Probably at this point they're calling for the Republicans possibly to take over the House and the Senate. That's probably going to affect the market at that stage. But after we get through that October area, we should be able to. It looks like we could probably rally into the end of the year. But I still think it still looks good. We're going sideways here for the last five days or so. But expect, actually, we a couple good closes in here. And I think we can get a nice little move in this market over the next couple weeks.
All right. Well, that's all we have for you this week. Remember, if you have a question you'd like to answer on the next Tuesday Tech Talk, email it into support@marketedge.com or ask one of our live chat representatives to pass your question along to us for the next Tuesday Tech Talk. Thank you for tuning in, and we'll see you next week.